All right, y'all. Incoming. Hold on, let me make sure I'm. Yeah, we straight. So look, I just got a question from a T4T bootcamp student. Shout out to Lil Nomi. That's how we gonna carry it, right? The question was, do you think UJ is good to enter for a sell? And I said, hold on, let me check. So we about to check the charts real quick, and see if UJ is setting up for a sell. Now, overall, the range of this market, I'm on a daily time frame starting off, and what I'm looking at is I'm looking at the highs and the lows. So I'm gonna mark that off just so I can get the range of this current market. We got a high here. The market retests but doesn't go as high and then drops. Retest again and then drops. So I got a high there, and then I have a low here that has not, well, this low got broken. Hold on, let me see if I put it. All right, I ain't put it in the right spot. This low right here did not get broken. See, it went up, came back to retest, but did not break below that low. So the current range of this market is right here, from this high to this low. Now I can see moving forward that I'm gonna mark off some major highs with a horizontal line just so we can see that that's a high there. The market drops down and has a significant pullback right here, so I'm gonna mark that as a significant high. The market, and then so you see these that could be pullback, and I could mark that high, pull back, mark that high. I'm actually gonna mark that high right there though, because it did not get taken out. It didn't get traded above, almost right there, but not really. So damn, I didn't see that. Okay, anyways, all right, so hold on, let me I'm gonna respond to the message after. I got a message coming through, that's why I was like taking a pause. But let me erase this too, because that doesn't make sense for right now. So I got liquidity sitting at these highs, right? And this price, this is a double high right here, because these two highs are significantly at an equal range, right? So this is definitely liquidity right here. And then if we were to keep going down, we would see that the price came down and popped back up. So this was a level of liquidity. Now the thing about this level of liquidity is that it got taken out, right? So they collected the money from that high right here. Boom, they took it out. The algorithm kicked in and it started dropping back down. They tried to retest but didn't go back up there, fell back down, and then they finally broke above this high with the disproportionate candle, right? There's a gap in the market with this candle. So the first thing we got to do is pay attention to how it got there, right? From this high, it dropped down, retested, and fell lower. So the market broke these lows right here, which was at the time a level of liquidity. So when the market traded through that, it traded below and it stopped down here. So on the way down, you can see these big engulfing candles creates a disproportion in the market. So I want to identify that disproportion with the previous candle and then the candle after. So I'm going to draw that across, and I can see that the price is breaking through that that gap or that disproportion in the market, which is the second thing that makes up market structure. But I did that on the daily. So overall, I did the daily time frame to get my bias, like where is the market going. And I could see for the last few months, since April, the price has been going up. How do I know? Because I see lows right here. That's a low. The price comes back up and drops down, creates another low right there. The price went up, dropped down, created another low right there. And obviously these are lows as well that haven't gotten taken out. This is a low, this is a low, but the major ones, like this one gets created, the price goes up, and then this major one gets created as well because of how far it came down, but it still did not break below these lows. Let me see for a second. Did it take out this one? I think it took out this one. Yeah, they took out this low right here. So they took out this low, but not these ones. And the banks are greedy. They're going to go get their money before they popped up how they did. So my bias is bullish. I think this market is going up right now simply based off of market structure and what it's been doing. So if I do this trend line right here, and I just put that on there, connecting it to at least 2 other areas, I want 3 or more touches on the trend line, I can see that this market is trending up. So I'm going to be looking for buys in this market. If I'm looking for sells, then I already know. If you look, like, for example, let me find an uptrend so I can make an example of it. The one, to answer the question, no, I would not be looking for sells right now, because it's 4 o'clock. The market is about to close. Secondly, this is not the time in the market where the market produces a lot of volatility. So you could get in a trade right now, but that trade is going to not have too much movement. It's going to kind of consolidate, because the banks, the people who like the market makers, they're not actually trading right now. They're off enjoying their profits. So if you look for a sell in a uptrend, it's going to be like that, right? You're not going to get too many pips. Downtrend, when the market goes up and it starts to come down, this is considered counter trend trading. And you only know it's counter trend trading once you identify the trend. So we're on a daily time frame doing top down analysis, and we've identified that these are the highs and these are the lows, and the market has not taken out these lows yet, but they are looking like they're on their way to take out these highs. So this high got taken out right here with that engulfing candle. Now, once we do that, we can drop down to the 1 hour and find liquidity. So this was a high from June. The price got, that high got taken out with, damn, did I exit my freaking screen? It's cool. I exited my other screen. All right, I'll make this quick. So the price got taken out right there. It got traded above. And then it got traded above with a disproportionate candle. So you see the price trades above with a big engulfing candle. This big engulfing candle left a gap in the market. Let me just highlight it so eyes can get used to seeing it. All right, cool. If I was looking to buy this, I would wait for the price to come back down here. Now, to answer the question, is it a good time to take a sell? It is a good time to take a sell for one reason, because the market already broke above a high, and then the algorithm kicks in. So if it's going up and it breaks a high, the algorithm is going to kick in and the price is going to start coming down a little bit. If it's going down and it breaks a low, the algorithm is going to kick in and it's going to start to go up a little bit. So I'll show you that on gold. But if I was looking to sell, I would be looking to sell, but only up until this point. I would wait for a reaction up until this point, because this is where the market broke a high, and it also did it with a disproportionate candle, right? So liquidity and disproportion is what market structure is. That's the most important thing you need to understand about trading. Before your entries, before the times to trade, all that shit is irrelevant if you don't understand liquidity and disproportion. Liquidity sits at the highs. In this case, you can see the highs keep getting taken out. They get traded above, and the price will come back down to get in at a better price for the banks before they go up. Come back down. See this high? The price trades above it. The algorithm kicks in and it trades back down a little bit. Goes higher, breaks above this high. Algorithm kicks in, trade back down a little bit. That's really the market. So a sell you could take here. It would not be a major problem, but this not a sell you would want to stay in and catch a major move from. You would really be looking to take it back down to this zone where this gap got created and close out your trade there. But then again, it might not even go back down there because of how bullish the market is. So is it a good time to trade USDJPY? If I had to give you 3 reasons, only one of those reasons would be valid, and that is yes, it is a good time to trade because it did just recently break a high. It is a good time to sell it because it did recently just break a high. And then if you were looking to sell it, these would be your targets, right? This low right there, that would be your TP1, which is really little, but it's better than nothing. And then your TP2 would be right there. Let me make it blue just so it's easy to identify. That would literally be your TP1 and your TP2. So this is what the trade would look like. If you went in for a short, let's say you got in right here, the stop loss would be above these highs, because if the price continues to go up and breaks these highs, just consider it a loss. It's not a problem. Every trade you get in, you got to risk something. So all you want to do is have proper risk management. And then TP1 would be for 15 pips. TP2 would be for 67 pips. So that would be my trade if I was taking a sell. But the two other reasons why I wouldn't take a sell is because of the timing. It's after 4 o'clock. There's no real volatility in the market. And then two, I don't have enough confirmations. Like I don't see a break of structure to the downside like I do to the upside. I don't see multiple touches at a certain price. I don't see any candlestick patterns. So if you had 3 reasons to trade, one of them would be yes. The 2 other reasons would be no. So I hope that explained it. Super simple. Just to answer the question, is now a good time to take a sell on USDJPY? No, because 2 of the 3 reasons don't agree with the consistency of making money in the market. So see this move, this big ass move happens at 9 a.m. right? This move to the upside happens, it starts at 7 a.m. Starts really forming at 10 a.m. This move was a London session move, but you see this move to the upside to finish it, 7 a.m., 9 a.m. That's when you're really looking to get in your trades. The best 2 times to trade this is Asian session and then New York session. Asian session, you're going to catch a move, and then right out of Asian, 5, 6, 7, you can catch a move. Look at this day. This was just straight up from Asian session. But again, look at this big engulfing candle. This happens at 8 a.m. So, no, right now is not the best time to trade, but can you still make money if you trade it right now? Yes. Would you be able to consistently do it over time? Not as much, right? So we want to make consistent money over time, and that's my quick video on is right now a good time to trade. You already know it's your boy Eddie One Take Man. Today's a beautiful day. It's a day we never seen before, and a day we'll never ever see again. It's trading for the trappers. Make sure you take risks and profit. Yes, sir. Catch you on the next video.